Hi, I'm Warren with Warren's Money Buffet. Last December I had some extra cash and a wild idea. What if I turned the college football playoff into a stock market experiment, buying and shorting companies based on which teams won or lost, but only if those teams had a real chief executive officer connection to a public company? I set strict rules. Every time a team won, I bought $1,000 of their alumni chief executive officer's stock at the first available trading day's closing price. If a team lost their first game, I shorted $1,000 of their alumni chief executive officer's stock at the closing price on the first available day after they lost. Each buy or short was a separate position. All positions, winners and losers, would be held until the last trading day of January, no matter what happened in the market or on the field. No compounding, no rolling, no early exits. Just pure bracket chaos, held to the bitter end. Before the games began, I did my homework. I scoured Wikipedia, Fortune 500 lists, and business school alumni pages. I wanted only real, direct links. No cousins, no honorary doctorates, no honorary board seats. Here is what I found. Ohio State had Mark Frisora, who was Chief Executive Officer of Caesars Entertainment until 2019. Notre Dame had Brian Moynihan, the current Chief Executive Officer of Bank of America. Texas had Michael Dell, founder and Chief Executive Officer of Dell Technologies. Penn State had Kenneth Frazier, who led Merck until 2021. Oregon had Phil Knight, co-founder and former Chief Executive Officer of Nike. Indiana had John Chambers, former Chief Executive Officer of Cisco Systems. Georgia had Daniel Amos, Chief Executive Officer of Aflac. Tennessee had Charlie Ergen, founder and Executive Chairman of EchoStar. Southern Methodist University had John Christman IV, Chief Executive Officer of APA Corporation, formerly known as Apache Corporation. Boise State had Sanjay Mehrotra, Chief Executive Officer of Micron. Arizona State had Jeffrey Bukes, former Chief Executive Officer of Warner Brothers Discovery. Clemson, after a deep dive, had no current or recent major public company Chief Executive Officer. The closest were Robert Brooks, founder of Hooters of America, and Monish Pabrai, a prominent investor, but neither qualified for a stock pick. The bracket was set. The first round kicked off December 21, 2024. Ohio State beat Tennessee, so I bought $1,000 of Caesars Entertainment at $60 per share, which meant I now owned 16.67 shares. Tennessee lost, so I shorted $1,000 of EchoStar at $25 per share, giving me 40 shares on the short side. Notre Dame beat Indiana, so I bought $1,000 of Bank of America at $43.41, which translated to 23.03 shares. Indiana lost, so I shorted $1,000 of Cisco Systems at $58.12, putting me short 17.19 shares. Texas beat Clemson, so I bought $1,000 of Dell Technologies at $120 per share, adding 8.33 shares to my portfolio. Clemson lost, but since they had no public company chief executive officer, I skipped them. Penn State beat Southern Methodist University, so I bought $1,000 of Merck at $97.21, which equaled 10.29 shares. Southern Methodist University lost, so I shorted $1,000 of APA Corporation at $18 per share, resulting in a short position of 55.56 shares. After the first week, I tracked the portfolio. Caesars Entertainment closed at $61.80. My 16.67 shares were now worth $1,029, a gain of $29. EchoStar dropped to $24.50, so my short was valued at $1,020, a $20 gain. Bank of America ticked up to $44, so my 23.03 shares were now worth $1,013, a gain of $13. Cisco Systems inched up to $59, so my short lost $17, now worth $983. Dell Technologies soared to $129, so my 8.33 shares became $1,075, a $75 gain. Merck nudged up to $99, so my 10.29 shares were now $1,021, a gain of $21. APA Corporation dropped to $17.85, so my short was worth $1,008, an $8 gain. After week 1, my total portfolio value was $8,135. The S&P 500 was down 2.5% in December. I was beating the market and feeling like a genius. The quarterfinals arrived. Ohio State faced Oregon and won, so I bought another $1,000 of Caesars Entertainment at $62 per share, bringing in 16.13 more shares. Oregon lost their first game, so I shorted $1,000 of Nike at $120 per share, putting 8.33 shares on the short side. Texas beat Arizona State, so I bought another $1,000 of Dell Technologies at $130 per share, which added 7.69 shares to my holdings. Arizona State lost their first game, so I shorted $1,000 of Warner Bros. Discovery at $30 per share, resulting in 33.33 shares short. Notre Dame beat Georgia, so I bought another $1,000 of Bank of America at $45 per share, giving me an additional 22.22 shares. Georgia lost their first game, so I shorted $1,000 of Aflac at $75 per share, which meant I was short 13.33 shares. Penn State beat Boise State, so I bought another $1,000 of Merck at $100 per share, which added 10 more shares to my account. Boise State lost their first game, so I shorted $1,000 of Micron at $55 per share, ending up with 18.18 shares short. By the end of the week, Caesars Entertainment climbed to $63, so my new 16.13 shares were now worth $1,016, a gain of $16. Nike dipped to $119, so my short was valued at $1,008, an $8 gain. Dell Technologies surged to $135, so my new 7.69 shares were now worth $1,037, a gain of $37. Warner Bros. Discovery dropped to $29, so my short was now worth $1,033, a gain of $33. Bank of America ticked up to $46, so my new 22.22 shares were now worth $1,022, a gain of $22. Aflac dropped to $74, so my short was now worth $1,013, a $13 gain. Merck dropped to $99, so my new 10 shares were now worth $990, a loss of $10. Micron jumped to $56, so my short was now worth $982, a loss of $18. At the end of the quarterfinals, my portfolio was up to $8,544. The S&P 500 was up 2.7% in January. I was still ahead. The semifinals came next. Ohio State beat Texas, so I bought another $1,000 of Caesars Entertainment at $63 per share, which meant another 15.87 shares in my portfolio. Texas was finished, so I did not add more Dell. Notre Dame beat Penn State, so I bought another $1,000 of Bank of America at $46 per share, which gave me 21.74 more shares. Penn State was out, so I did not add to Merck. At this point, I was holding 4 buys of Caesars Entertainment, 3 buys of Bank of America, 2 buys of Dell Technologies, and 2 buys of Merck. I was also holding shorts on Nike, EchoStar, Cisco Systems, APA Corporation, Warner Brothers Discovery, Aflac, and Micron. All positions would be held until the end of January. The championship arrived. Ohio State beat Notre Dame, so I bought a fourth $1,000 position in Caesars Entertainment at $64 per share, which meant I now had 15.63 more shares in the company. Notre Dame was finished, so I did not add any more Bank of America. Now, the final week of January, I closed every position at the January 31st closing price. Caesars Entertainment closed at $67. My 4 buys were 16.67 shares at $60, 16.13 shares at $62, 15.87 shares at $63, and 15.63 shares at $64. That is a total of 64.29 shares, all sold at $67, for a total of $4,309. My total investment in Caesars Entertainment was $4,000, so my gain was $309. For Notre Dame, Bank of America closed at $41.73. My 3 buys were 23.03 shares at $43.41, 22.22 shares at $45, and 21.74 shares at $46. That is a total of 66.99 shares, all sold at $41.73, for a total of $2,795. My total investment in Bank of America was $3,000, so my loss was $205. For Texas, Dell Technologies closed at $137. My 2 buys were 8.33 shares at $120 and 7.69 shares at $130. That is a total of 16.02 shares, all sold at $137, for a total of $2,194. My total investment in Dell Technologies was $2,000, so my gain was $194. For Penn State, Merck closed at $76.84. My 2 buys were 10.29 shares at $97.21 and 10 shares at $100. That is a total of 20.29 shares, all sold at $76.84, for a total of $1,559. My total investment in Merck was $2,000, so my loss was $441. For Oregon, I shorted Nike at $120 after their first game and covered at $111. That put me short 8.33 shares, so my profit was $92. For Tennessee, I shorted EchoStar at $25 and covered at $22, 40 shares short, profit $120. For Indiana, I shorted Cisco Systems at $58.12 and covered at $54, 17.19 shares short, profit $71. For Southern Methodist University, I shorted APA Corporation at $18 and covered at $15, which meant a short position of 55.56 shares, profit $167. For Arizona State, I shorted Warner Brothers Discovery at $30 and covered at $28, 33.33 shares short, profit $67. For Georgia, I shorted Aflac at $75 and covered at $72, 13.33 shares short, loss of $40. For Boise State, I shorted Micron at $55 and covered at $58, 18.18 shares short, loss of $33. At the end of January, I added up all the final values. Caesars Entertainment, $4,309. Bank of America, $2,795. Dell Technologies, $2,194. Merck, $1,559. Nike short, $1,092. EchoStar short, $1,120. Cisco short, $1,071. APA short, $1,167. Warner Brothers Discovery, short, $1,067. Aflac short, $960. Micron short, $967. My total invested was $19,000. My final portfolio value was $19,301. My net gain was $301, a return of about 1.6%. How did the S&P 500 do over the same period? From December 21st, 2024 to January 31st, 2025, the S&P 500 rose about 3%. My bracket portfolio underperformed the market, but it was close. Some teams were big winners. Ohio State, with 4 buys of Caesars Entertainment, returned a total gain of $309, about 7.7%. Texas, with 2 buys of Dell Technologies, returned a gain of $194, about 9.7%. The best short was Southern Methodist University, shorting APA Corporation for a gain of $167. The worst performer was Penn State, with 2 buys of Merck, for a loss of $441, down 22%. Week by week, the portfolio was a roller coaster. After the first week, I was up 1.7%. After the quarterfinals, up 5.1%. After the semifinals, up 3.5%. By the end of January, just a 1.6% gain. The S&P 500 outpaced me in the end, up 3%. The experiment was close, but the market won. What did I learn? First, even with a fun, research-driven strategy, the market is hard to beat. Second, some CEO connections really do matter. Michael Dell and Dell Technologies, for example, crushed it. Third, shorting is risky, but sometimes pays off, like with APA Corporation and Nike. Fourth, luck plays a huge role. A few bounces the other way, and I could have lost money. Fifth, the market does not care about your bracket, your research, or your favorite team. Would I do it again? Maybe. But next time, I would skip the shorts and stick to index funds. Still, this was the most fun I have ever had tracking both football and stocks, and I learned more than I ever expected. If you enjoyed this breakdown, let me know in the comments, and if you want more market madness, hit subscribe. Remember, the market is the ultimate teacher. Sometimes it rewards you for your research. Sometimes it humbles you for your hubris. But if you keep learning, keep reflecting, and keep showing up, you will come out smarter on the other side. Thanks for listening, and I will see you in the next one.